Now, Tesla posted record deliveries in the third quarter, coming in at nearly 500,000 vehicles for the 3 months ending in September, better than expected. But the company's shares tracked lower after the numbers amid concerns those figures were skewed by the impact of the expiry of the US tax credit on electric vehicles, which the automaker used to drive a sales campaign in the period. Year-to-date, Tesla deliveries are down 6%. Meanwhile, Steve.
Right. Meanwhile, a group of Tesla shareholders have urged investors to strike down the company's plan to hand over, you know how much money, don't you? It probably says it on the screen. Yeah, it does, yeah. $1 trillion, just $1 trillion over to the CEO Elon Musk over the next decade, saying the board's, quote, relentless pursuit of retaining Musk as chief has delayed progress on goals set at the firm's last annual meeting, and pointing out a decline in key metrics. That group includes SOC Investors, which works with pension funds, sponsored by a trade union group, which wrote to fellow Tesla investors saying, "We believe the board's failure to ensure CEO Musk devotes full attention to Tesla whilst making him the highest paid CEO in history shows how beholden it is to its management." And I know that that is the most divisive issue out there in the remuneration world, how much Elon Musk is paid and how much he's worth. So let's have a look at the shares pre-market. They are called 1.75% higher, looks like, where they're trading there as well. Right, let's get to our next guest, Steve Wesley, founder of the Wesley Group, former board member of Tesla. Steve, we love chatting to you, I have to say. So, I mean, I don't know, do you want
Good to be here.
Before we talk about all the other amazing stuff we talk about with you and Tesla, do you want to weigh in on the pay? I mean, everyone's got a view. Have you got a view on Mr. Musk's pay package?
Well, it is ginormous, but look, it's hard to argue with a $1 trillion market cap. The guy has done something no one else dreamed of. And I think the good news is the board is saying, look, we're going to attach your pay to actual performance. Now, $1 trillion, obviously, that's a nosebleedy high number. But to get that, he's got to get the market cap of the company up to $8.5 trillion, sell 50,000 Optimus robots, so on and so on and so on. That's not an easy goal. We'll see how close he gets.
Yeah, no, I think that's very wise. I think you're absolutely right. The goals have got to be strenuous, but if he gets there, then maybe he deserves the money, Steve. Do you want to weigh in on what we're seeing in Tesla at the moment, though, as well? Just on, in terms of, the sales were good, but they weren't just good for Tesla. They were good for pretty much everyone because of the expiry of the tax credits. In the cold, hard, harsh world of post-tax credits, where is Tesla positioned on cars at the moment, not on all those other exciting things?
Yeah. No, look, on cars, it's a little worrisome. Sure, record Q3 sales, 497,000 units sold. That's up a good bit from the last 2 quarters. 26 billion in revenue, on track for about 100 billion in total revenue this year. But this is going to be the second year of flat growth. And the big picture is they're likely to sell 1.6 million units this year. That's down from last year. And the concern is their European sales down 30%, while the rest of European EV sales are up 30%. What that means is competition is coming. I think this could be the calm before the storm. Expect a tough Q4 with U.S. tax rates going, rebates going away. Tesla's got to get new product into market, and they got to do it soon.
Steve, can I just push back? Do the deliveries even matter at this point? You and I sat at tech events where we're talking about the future of tech. It's all AI. This is a company where shareholders will vote soon about whether to invest in XAI. We know that this is a company many think will dominate in the autonomous space down the track. Doesn't that count for investors more than deliveries today and tomorrow?
Well, that's the story Tesla want to tell us, because look, you post 3 flat years or 2 years going on to 3. You need another story to keep that $1.4 trillion market cap. And so what Tesla's saying is, don't invest in us in a car company, invest in us as a tech company. Because if you look at the fundamental numbers, you're seeing more competition than ever from Hyundai, from Volkswagen in the West, but BYD has blown by Tesla. Profits coming down. I mean, the auto story is a little scary. And you add to that nosebleedy high PE ratio, almost 250 for reference, it's just at 50. Good God, they've got to show that this robo-taxi thing is real. The Optimus robots are coming, and they're a little behind on that. So that's the thing to keep an eye on if you're an investor.
Steve, if we just hone focus in the US, we know there's a divide between US tech and Chinese tech. Is there any reason why Tesla will not dominate with robo-taxis in the US market?
Yeah, they're behind. And look, 3 years ago, it looked like a neck and neck race with Tesla and Waymo. But now, fast forward to 2025 here, Waymo has full regulatory permitting in 6 cities. They're moving quickly to the East Coast, Washington, Atlanta, Miami coming. By next year, they're expanding globally. They're going to be in New York, Tokyo. They're really moving. Tesla's kind of stuck in neutral, if you will, approval partially in Austin. They've got to get open in San Francisco. They've got to go show they can move into new cities. In the meantime, Waymo's done something extraordinary. They're not only going from 12 million rides provided this year to 24 million next year. By the end of this year, they will have permitting the first autonomous vehicle company to do so, to provide rides on freeways, not just in the cities. Once you can do cities and the freeways, that really opens the door to going global. This is going to be an interesting smackdown, as we say in the US.
Steve, it's Arjun here. I just want to go back to the point you made around BYD and the Chinese vehicles as well. I was at an auto show in Munich just a few weeks ago. I saw a lot of the Chinese competitors. They had massage chairs, refrigerators in their cars, all the latest ADAS tech you could think of as well. And it was hard to see where Tesla differentiates. There has been a lot of talk about this potential mass market model, which was promised this year, and it hasn't quite happened yet. But is the mass market model that Tesla is planning going to be a big deal for the company that will allow it to compete again with the Chinese, who are expanding very aggressively, particularly into Europe?
What? You don't have a refrigerator and massage chair in your car? Huh. No, look, you're asking the right question. Tesla has been promising a low-cost market car for the last 3 years. They desperately need a car in the 30,000 euro price range. Now, take a look. BYD has blown by Tesla in terms of EV sales. They're selling a vehicle in China for $10,000. That includes their Eye of God autonomous full self-driving feature. But even in Europe, they're now offering this $20,000 Dolphin. Tesla has got to get a car in those markets. By the way, let me step back for a minute. To have a great car company in the past, you needed to dominate one of the three big markets: China, North America, Europe. Now, the rest of the world is becoming the important marketplace. Are you selling cars in India, Indonesia, Brazil, Vietnam? And that's where BYD is really excelling with their $20,000 car. Tesla needs something in that market if they're going to challenge globally. We'll see how quickly they can do it.
And just to pick back up on that robo-taxi point, Steve, I am at a tech conference. I've ridden in robo-taxis before, but I think there's still a lot of questions over the long-term viability of the business model. There are a lot of analysts who predict, well, the robo-taxi business for Tesla could be booming, could be worth billions of dollars in the future. But as it currently stands, do you see robo-taxis more broadly, including Waymo, being viable, profitable businesses?
Waymo and autonomous vehicles are the future, flat out, end of story, and they're coming quickly. In the San Francisco Bay Area, where I live, it seemed like science fiction just 5 years ago. Now you see them everywhere. After you've done it once or twice, you completely forget there is no driver in the driver's seat. This is the future. Now, the costs are coming down dramatically. Waymo, the leader, using today Volvos with the extra technology on top, it's about a $120,000 vehicle. That number is about to be cut in half. Waymo's in the process of switching over to use Hyundai's much lower cost, lower profile vehicle. The costs are coming down for everyone. So this is the future. It's coming faster than people think, not just in North America. China is moving ahead full bore. Competition is coming, price is coming down, and it's a good thing for the public because it's going to enable seniors, people with vision difficulties, etc. And women tend to prefer them because they're safer. Make no mistake, whoever wins this technology battle is likely to have the most valuable vehicle company in the world.
Steve, let me ask you about Elon Musk and his role at Tesla. The stock is up almost 70% over the last 6 months, widely outperforming a number of its peers in Europe and the U.S., if we can call them peers. Can we say definitively that Elon Musk is a good thing for Tesla, given the fact that the shares have appreciated so significantly since he left politics and refocused on Tesla?
Well, again, whatever your politics are, it's hard to argue with the results. $1.4 trillion market cap. The share price is up 70% in the last year compared to 17% for the S&P. So if you're a shareholder, it's hard to be too grumpy about that. But you're right to say, hey, look, looking at the performance here, auto sales are just not going up very quickly. If you look back to 22, 23, 2022, 2023, it was up 71%, 51% respectively. They've got to generate growth again. That means getting into the developing markets. That means you've got to have some new product. The only new product Tesla's brought out in the last 5 years is the Cybertruck, and that wasn't much to talk about. So they've got to ramp up auto sales. Their energy division is doing great. I think that's part of why the stock is as high as it is, but they've got to prove they're a technology company, not just an auto company, to maintain this valuation. And that means making full self-driving real. And it means getting into developing the Optimus and showing you can get new products to market when you promise. And that one they've struggled a bit with. Let's see how they do in the next year.
Why has Waymo been so much more successful than Tesla when it comes to permitting, when it comes to regulation, when it comes to expanding and getting its product out there?
Well, look, Google, Alphabet, the parent company, this is not a chopped liver company. This is one of the biggest 5 companies on the planet, huge R&D background. But it is a surprise, at least in my book, that Waymo seems to have distanced itself so much from Tesla's full self-driving. Some people will say it's because Tesla has been stubborn about not using LiDAR, which puts them in a technology disadvantage. Others would say it's the revolving door of senior executives at Waymo. It's hard to know why they have not gotten permitting more quickly, but at the end of the day, here are the key numbers. Waymo's already full regulatory approval in 6 cities, moving to 12 cities within the end of the year. They have a massive lead in terms of numbers of rides provided, 250,000 a week. That number will easily double in the next year. And the other key number that everybody's going to know in the future is, what is the duration between critical interventions? That's where the car just is confused and has to stop or pull over. Waymo, about 10,000 miles heading to 15,000. The numbers are quite good there. Tesla really stuck in the 400 to 500 mile range. You don't want a driverless car that has to pull over every 400 miles. We'll see if they can fix that.